Hey, everybody. Thanks for joining us today. I wanted to spend some time to talk about the Paycheck Protection Program loan forgiveness application that was released Friday night. I think Kathy sent everybody a copy of the application with the email that went with this. So that's awesome if you've had a chance to look at it. Remember that the application to borrow funds was essentially 2 pages plus instructions. This application document is 11 pages, including instructions. And so I thought we'd begin the conversation, even though you may not be filling this out for quite a while, to prepare you for what is going to be needed, what the process is going to be like, and how to cope with it and get ahead of it now. So a couple things to follow up on prior webcasts concerning the PPP program. First of all, there has been a Senate bill introduced to clarify the issue about deductibility of expenses paid for with PPP money. If you've not had a chance to reach out to your Congress people, you should do so. It's still an open issue. It has not been resolved. That's issue number one. Issue number two is the PPP program, as far as I know, is still open, still has money available. Yesterday was the deadline for people to return funds, and that followed up the safe harbor information we got last week that essentially if your loan was less than $2 million, that you were going to be deemed to have met the good faith certification requirements and didn't really need to worry about an audit. Despite that, I'm still encouraging you to keep very detailed, copious records about everything, because this is changing daily, and I just don't have confidence that things are going to stay the way that they are right now. So I wanted to just kind of go through those things on the program so far. Now, I've read this instruction thing application for the forgiveness aspect of the PPP program. I've been through it about 4 times. I have over 50 pages of notes. So this may take longer than the 30 minutes that we've scheduled this for. So I'm viewing this as, this is an introduction. I know there's going to be more guidance coming because they didn't answer questions that practitioners have resolved, and some of the groups I belong in have already started sending questions all over the place. And so this is just a beginning of what's going to be some changing processes, okay? So I'm going to share my screen for a minute just so everybody can see the form, and we're going to talk about what's going on. There's a couple things, actually, before I do that, there's a couple things that are really, really important, and actually there's a good thing for the payroll cost calculation. Okay, so if everybody remembers, what's been communicated to us to this point in time had been that starting with the day that you receive your funds, you spend the money, you have 8 weeks. Okay, so that's called the covered period. That covered period is still there and available. However, in recognition of biweekly payrolls, the SBA has allowed for what's called an alternate period that you can elect. Okay, and that alternate period is for the payroll costs only. So if you elect the alternate period for your payroll costs, that's the period for your payroll costs, but all of your other costs that you're paying with PPP money are still on your 8 weeks from disbursement. So don't mix up those periods, right? So keep your calendar straight if you choose the alternate period. But the alternate period, if you have a biweekly payroll, allows you to start your 8-week period when your next payroll hits. So the first payroll period after you receive your funds, that's the beginning of your 8-week period. So it essentially allows you potentially to get one more payroll period into the PPP program using that money and into the forgiveness program. Okay, so if you're doing some projections and we're having trouble reaching your 75% payroll costs, this alternate calculation for the payroll period may help you in getting enough payroll costs so you can cross that 75% threshold. Okay, so that's one big issue in this application is they've adopted the alternate period, or they've allowed for an alternate period. So alternate periods for payroll costs only allows a biweekly payroll provider or payroll payer to elect the beginning of the next payroll period after you receive your disbursement as the beginning date for your 8 weeks. Okay. Now, I'm going to go off notes here because there's some of the stuff that's very technical, and then I'll share screens here in a second. So the other concepts that are really important here are the words paid and incurred. So for payroll costs, only payroll costs that are incurred or paid within the 8-week period are forgiven. So you can conceivably have paid a payroll period for something that was incurred prior to the period if you paid it after you received your funds, depending on the 8-week period that you select, right? But that's the only thing that counts for payroll costs. The payroll costs incurred your last period during the 8 weeks selected are eligible for forgiveness. Okay, so your payroll costs for the last pay period during the 8 weeks selected are eligible for forgiveness so long as you make the payment by the next regular payroll due date. So they've kind of extended it a little bit. You can't prepay way in advance, but if you have a week that's a tail or something like that, you can pay that out. Or if you're mid-month and you pay monthly, however your payroll is structured, they're trying to accommodate that a little bit. Now for non-payroll costs, so this is your mortgage interest, your rent, your utilities, those costs must be paid during the 8-week period. Now this is the 8-week period that is 8 weeks from your disbursement date. You can't elect an alternate period for non-payroll costs. All right. Now you can also use incurred costs during the 8-week period as long as it's also paid by the next regular due date. Okay. Even if that's outside that 8-week window. So you could accrue rent and make that payment even if it's outside that 8-week window, as long as you've gone ahead. At this point, it does not look like prepayments are necessarily going to be covered, but if you pay your rent on the first of the month and you know it's due the first and you pay it the first, then that's going to be covered. But if your period ends on the 26th, that next month's rent payment that's due on the first isn't going to be sucked back in based on what we know right now. So watch the prepayments. Try not to do them, okay? Keep within the 8-week period, paid or incurred. Very important to do that, okay? Now, I'm going to switch, because you don't need to see the Willey War Room here. I'm going to switch screens so you can see the application itself, and we'll go from there. So, sorry, this is new technology to me, right? There we go. All right, so you should be seeing now the Payroll Protection Program loan forgiveness application. It's an 11-page packet. The first page is dedicated to instructions and definitions. They require some information that you should be able to pull from your documents, or your bank should be able to tell you pretty easy. That includes the SBA PPP loan number, the lender PPP loan number, and your loan amount. If you have an EIDL amount, that's also required in here, and then it asks for a bunch of other things: employees at time of loan application, employees at time of forgiveness, etc. So that page is definitional. The second page is instructions on doing different things, and it breaks down certain costs. Really, really important that you follow this stuff, and remember that salary over 100,000 a year, you cap it at 100K. It doesn't go over that. So the application process, this packet has 3 forms that we need to worry about. Well, 4 forms that we need to worry about filling out. The first one this is the main PPP loan forgiveness calculation form. This is the application form itself. And we're going to not spend very much time on this because the details are in some worksheets that we're going to get to. The second page is your certification page. Much like your application, you had a one-page application, you had a certification page. So this mirrors that with a one-page application and a certification page. The packet includes a Schedule A, and then it has a worksheet to Schedule A. So I'm going to skip the Schedule A for right now and go to this worksheet, because this worksheet is the one that's going to require some patience and probably more records than you want to compile, but that's what we got to do. So this is the PPP Schedule A worksheet. 3 sections to this worksheet. Table 1 is if somebody that was employed at any time during the covered period, or if you elected the alternate covered period, which is the biweekly, the first payroll, the beginning of the first payroll period after you receive your disbursement. So the 2 requirements for employees listed in 1 are that, and that they also were people that were compensated at less than $100,000 in 2019 or not employed by the borrower in 2019, okay? Now you'll see that in this table, they want to know the name, the employee identifier number, the cash compensation paid to the employee, the average FTE, and you will become sick of hearing that little initial, right? You know, certain initials we get, PPP program, I'm kind of getting sick of it. Maybe you are too. Average FTE, you're probably going to get sick of it. And then the salary and wage reduction stamp. So remember that for payroll costs, we had to keep our number of employees static, right? If you have a drop in your employee count, you can lose some of your forgiveness benefit. They're going to measure that with what they call average FTE. Okay. And so we got to calculate that. And then we have the salary and salary hourly wage reduction. Remember, if you've cut somebody's pay more than 25%, that could also cause you to lose some of your forgiveness capabilities. The second part, the second table on this form is for people that earned more than $100,000. They were employed at any time during the period or covered period. And in 2019, they were employed for more than $100,000. The cash compensation for those folks is essentially limited to $15,384. And so that's a little bit easier table to complete. And then the worksheet at the bottom with 5 steps is walking you through various safe harbors if you've failed any of the tests for either a reduction in workforce or a reduction in compensation. So if you fail those tests, we have a reduction safe harbor worksheet that we need to work through that is very laborious. And so let's kind of break down some of these things a little bit and what they mean, okay? So the first column that we're going to worry about on table 1 is cash compensation. Cash compensation is salaries, wages, commission, tips, vacation, sick, parental, family, medical, or sick leave pay, and then any allowance for dismissal or separation. Okay, so that's what cash compensation is considered. It does not include compensation over $100,000 for the year, or comp to someone living outside of the United States, or sick or family leave pay if you are claiming the credit available due to the COVID issue. If you're not claiming the credit, then it goes up in the cash comp column. Okay. The next box is average full-time equivalents, and they literally want you to, you can use one of 2 methods. One method is easier, but it might hurt you. So you got to be prepared to do the more complicated calculations. So just prepare yourself for it, right? So for each employee, you need to do a calculation of the average number of hours worked divided by 40 during this period. You round that to the nearest tenth, and you cannot have an answer of more than one. So if somebody works on average of 45 hours a week, they're a 1, you move on, right? If somebody works 38 hours, then 38 divided by 40, round it up to the nearest tenth, and that's the number that you get for it. You can skip the math and choose a 1 for a full-time person and 0.5 for a part-time person. Now, if somebody's hours have really dropped off on a part-time side, that might be beneficial to you. You're really going to have to work through these formulas, and I'm not going to tell you it's going to be a lot of fun, but you need to have those records and timesheets and all that kind of stuff. So hopefully you have that information available to you. Now, there's going to be a number of safe harbors that we have to worry about. So as you see there on the bottom of the worksheet A, the FTE reduction. So this means that there's a full-time equivalent reduction safe harbor. So if you have less FTEs employed during this period than you did in other periods, your forgiveness is going to be impacted unless you meet a safe harbor. So let's go through kind of what that process is. So if any FTE during the period is less than the average FTE during any of these periods, so you get to make an election. There's 2 choices. It's either February 15th of 2019, okay, to June 30th of 2019, or January 1st of 2020 to February 29th of 2020. So you can choose that period, and you would obviously want to probably choose the one that you had less FTE, because that'll make it easier for you to meet the threshold here. That's the election available to you, right? So choose the FTE that is most beneficial to you between those 2 periods. So that means you're going to have to go back to last year and pull records. All right. If your FTEs have dropped during the period or the covered period, then there are a couple safe harbors. So the first safe harbor is then you calculate February 15th of 2020 to April 26th of 2020. That's step 1, right? So if you fail the test, you go to step 1. So between February 15th of 2020 and April 26th of 2020, you calculate the average FTE for each employee that was employed during that period. And then you enter a number at the bottom of step 1. You do the same thing for the pay period, which included February 15th only. So it's a static, for most people, 2-week period. Calculate it for that. If step 1 is greater than step 2, then you go to step 4. All right. And if you go to step 4, you have to look at your FTE as of June 30th, 2020. So this is like the safe harbor. This is your absolute safest way to protect yourself, is if by the end of June of 2020, you are back to being fully staffed as you were prior to this all happening, then they're going to basically let you go, that you've met the FTE requirement test, and that you won't have any reduction in forgiveness as a result of failing the FTE test. Okay? Now, they have some other things that factor into this formula that aren't accounted for on worksheet A. There's some exceptions to people's FTEs and how they're calculated and whether you need to process it correctly or not. So the first one is if you've made a good faith offer that's documented in writing to an employee to return for rehire, and that employee refuses to come back to work because they're enjoying life and they're getting more money on unemployment with the $600 a month or $1 a week per week bonus that the federal government's thrown in until the end of July, as long as you document that you made a good faith offer and that the employee refuses to come back, that employee will not hurt your FTE calculation. Document it, okay? Secondly, if you have fired an employee for cause during the covered period, that will not count against you. Third, if you've had an employee voluntarily resign during that period, that will not count against you. And finally, if you've had somebody that's come and asked for a reduction in hours that you've accommodated, that will not harm you in this formula. Okay, so those 4 carve-outs also impact the FTE, but they're not reflected on this worksheet A. So worksheet A, for being a simple 1-page form, is going to involve a lot of data. And you just prepare yourself for it. So based upon what we've gone through, you're going to need records for February 15th to June 30th of 2019. You're going to need your records for January 1st to February 29th of 2020. And then you could potentially need records for February 15th, 2020 to April 26th, 2020. And then again, you'll need data for June 30th of 2020. So that's 5 or 6 periods that you're going to be calculating an average FTE by employee. So that could be a little bit of paperwork. So I strongly suggest, if you've got people that have a little bit of time right now and are having trouble keeping busy, maybe they can start pulling some of those records and making them in a format that you can use them readily to do these calculations. Okay. So that's the Schedule A worksheet. And these are the instructions for that Schedule A worksheet. And this also talks about the documents, but we'll come back to that in a second because we need to go back up to the calculation for reduction in pay, which they don't have a separate worksheet for, but it'll factor into this formula based on the cash compensation part of the calculation. And so the pay reduction part, I want to address real quick, and then we can talk about documentation and some other things that are rules that are coming out in this application. So the pay reduction part is your total loan forgiveness is going to be reduced by the amount of any reduction in salary or average wages if for people that earned less than 100K in 2019, if that reduction is more than 25%. And again, you have calculation for each employee. You have a reduction for each employee, or a calculation for each employee. You have to determine the average annual salary or hourly wage per employee during the covered period. And then you have to determine the average annual salary or hourly wage for each employee from January 1st, 2020 to March 31st, 2020. You divide 1 by 2. So the result of 1 is divided by 2. And if that result is greater than 75%, you're done. You don't have to worry because you haven't had a pay reduction for that employee. If it's less than 75%, then of course we have some safe harbors again that we have to go through, which involve more calculations. We again look at the February 15th, 2020 pay, and then we look at the February 15th, 2020 to April 26th, 2020 pay. If the pay for the period February to April is greater than the pay on February 15th, then you're not eligible for the safe harbor. You have to go back to the reduction. If the result of the February 15th to April 26th is less than what you paid on 2015, then you're fine. Then you can move on and you get your safe harbor. Okay. Now, there's also the June 30th, 2020 save date. Is if your salary is greater, if the salary is paid on June 30th, 2020 per employee is greater than what you calculate for February 15th of 2020, you have a safe harbor and you are exempt. I mean, you pass that test and you don't have any reduction in forgiveness as a result of FTEs, or not FTEs, of pay. Sorry, I'm rambling this stuff off because there's a lot of information. There's gonna be more guidance that comes out, and actually, you know, them allowing the alternate covered period could really benefit some of you. So I'm not gonna, I mean, we've waited for this guidance from the SBA for a while, and most people that got money are halfway through their 8-week period, approximately halfway through. Some people are less than halfway through. So there's still time for this all to come out. But I wanted to make, you know, if we can get a jump on some of the calculations that you have to do, I think that would be a benefit in collecting data, so that it doesn't all kind of dump at once. Now, we have, there's a couple of things that I want to talk about just real quickly with respect to documentation. And it's a really lengthy list. And so just be prepared to keep a lot of records, electronic records. Just keep a file and scan everything to it, and password protect it if you need to protect it from, you know, people snooping. But this is the documentation. So the last 2 pages of the 11-page packet are the documents that each borrower must submit. So this is the SBA saying you must submit this. And I would be very surprised if any of our lending institutions did not follow this to the T, because they want to make sure that if they're forgiving the loan, that they're getting paid back and that they don't have any liability exposure. So Schedule A and the calculation form for payroll, they require basically everything that would verify cash compensation and non-cash benefits from the covered period or the alternate payroll covered period. So they're looking for bank statements or third-party payroll service provider reports. They're looking for tax forms, 941s, state unemployment reports, those sorts of documents to back up the information you've submitted. Payment receipts, canceled checks, account statements. I mean, they basically have plenary authority, and they're asking for anything to back this up. So the forgiveness is going to be taken very seriously. It's not just going to be the wave of a hand. And the instructions don't talk about, and I haven't seen a lot of discussion yet about if there's going to be negotiation, if there's an appeal process, if somebody doesn't agree with an interpretation. Hopefully some of that guidance will all come out, because I'm sure there's going to be some issues that just aren't straightforward and could cause some stress. And I mean, this whole process has been stressful enough on everybody as it is. So hopefully we can minimize that. Now, so the payroll has a set of documentation. FTE has a separate set of documentation. So you have to show the average number of FTE employees on payroll per month employed by the borrower between February 15th, 2019 and June 30th, 2019. Average number of FTE employees on payroll per month employed by borrower January 1st, 2020 to February 29th, 2020. There's some special rules for seasonal employers that we haven't really discussed, but if you're a seasonal employer, you've got a different set of rules that you can elect for time periods. So you want to get this data together because you want to select the most favorable time period for you on measuring these things. So be mindful of that. For non-payroll expenses, business mortgage interest, you're going to have to provide lender amortization schedules, canceled checks. Business rent or lease payments. Now, this is a provision that could cause people some problems, because it says a copy of a current lease agreement and receipts for canceled checks. A lot of my clients, a lot of people that are on this call might own their building in a separate company, and they had a lease at one point in time, but maybe it's expired. Maybe it hasn't been kept up to date. Maybe they never had a written lease. So they're asking for a copy of the current lease agreement and receipts or canceled checks verifying the payments from the covered period. I'm not going to advise people to rush out and write a lease agreement, particularly one that's backdated. if I would expect that maybe guidance will come out that if you've got a pattern of making this payment and you're still occupying the premises and you maintain that, that you'll be okay. But I wouldn't be overly alarmed about that right now. If you have a lease agreement, is it still valid? I'd confirm that and get it ready to go. But I don't know that I'd go out and draft a lease quite yet until we see if there's any further guidance that comes out on this. And then business utility payments, copy of invoices for those that are paid during the covered period, and receipts, canceled checks, or account statements. Then interestingly enough, they've also said that there's a bunch of documents that you must maintain but is not required to submit. So the Schedule A worksheet table 1 and 2 are not required to be submitted with your application. Only Schedule A and the application form are required to be submitted. And then you have to keep all your records showing how you did it and what you did and how you did the calculation and backup for all of that stuff. Okay. So that's the information that the SBA is initially calling for. Now, the outcome of this thing is I don't know. I mean, I still think that if everybody's smart about this and you have the records and the people I've talked to are using the money the right way as intended, we'll be okay. Now, I've already got a notification from my lender on the PPP program that they are going to use a third party to manage this process for them. So if you think about this, the SBA is going to rely on the banks to do this, and some of the banks are going to rely upon third parties to do it because it's going to be a lot of work. There's over 2 million loans issued in this program. And, I haven't seen numbers on how many billions has gone out the door, but we went through the 350 billion and then needed more. And that second allotment hasn't been consumed, partially because of the big scare about whether people had met the good faith certification or not, and the SBA's attempts to characterize the certification from it was necessary because of economic uncertainty, from a necessary requirement to a need requirement. And the SBA finally backed off on that late last week and extended the deadline to return money till Monday. If you got a loan for over $2 million, you're going to get audited. So just keep the records and be prepared for it. It's just going to happen. I mean, they've made that pretty clear. So, so third-party vendors are going to be involved. So your bank is maybe going to be an intermediary. I don't know how far they're going to delegate the responsibility for this out, but there are going to be some delegation, and so you may lose the opportunity to be working directly with your bank. And as I said, I don't know if there's an appeal process or if there's some sort of negotiation that's going to go on with this. That's all kind of unclear at this point. But if you have hourly employees and they're not keeping very good time records, I'd sharpen that up. So you have some backup for it. It's going to be, that FTE calculation is going to be meticulous, and it's going to be very important for forgiveness. It could be a situation where you unintentionally go down, a full-time employee or something and end up having to pay back a bunch of money that you weren't planning on having to pay back. And it wouldn't be the worst thing. I mean, it's a 1% interest rate over a 2-year period, but that's not why you took the money. You took the money to help keep your business going, and we're expecting it to be forgiven if you did it the right way. So let's keep the records and make the process as simple and painless as we can for our banker friends. I'm going to just see real quick if there's any questions. And then we're going to have more on this because it's a lot of information to cover in 30 minutes. I want to do, I'm going to take the opportunity. I'm going to try to do some spreadsheets and actually work through some examples for people and do this again with some examples. And I think that'll make it clearer. So, Lori, if we kept our entire staff at the same pay, do all these calculations and forms still need to be done? Yes, ma'am. Because you got to prove that you kept them at the same pay, and they're going to count hours and pay, not just pay. And so it's not the same salary amount, not the same hourly pay amount. It's how much did you actually pay them? And, you know, I know some people that have had some attendance issues for staff and things like that that are going to drive their numbers down a little bit, and they're a little bit nervous about that. But I think they might have some safe harbors, and that's a voluntary reduction in hours and things like that. So, but I would just plan on keeping, you know, on doing all that data. If it's not submitted as a part of the packet, I think that it's going to hold up your forgiveness application. The other thing is that the application makes it clear that the bank has 60 days from when they receive your information to pass on the forgiveness part of it. So it might take a little bit of while to work its way through the system. Again, it's going to be, you know, complete inundation of records to the lending institution. So it just, everybody's got to be a little bit patient. Is there a deadline to submit this? As far as I know, there's not a deadline. If you remember, when you signed your loan papers, you had a 6-month grace period from when the loan was issued to your first payment being due. I would imagine that most of these applications are going to be filed in July time frame, because the June 30th, 2020 date is a really important date for people. If they can return to normal and normal staffing levels with normal pay, then that's a safe haven for a lot of people. So I can't imagine any application is going to be filed before June 30th, unless somebody knows that they've met everything and they want to submit it. But I would guess, I don't know what the deadline is, if there is one. The expiration date listed on the loan application form is 10/31 of 2020. So the program contemplates that nobody's going to file after 10/31, because then their 6-month deferral is going to be up, and they're going to have to start servicing the loan if they haven't got their forgiveness done by now. So I guess the loan application itself with that expiration date kind of contemplates a 10/31/2020 date. But I imagine most of these will be filed in July and August, just to make sure that the forgiveness is done and there's some certainty in the process before the payment stream begins. All right. I don't see any other questions. I know this is a ton of information. It's subject to change, as it has been throughout this whole process, but at least this is a little bit of clarity. We know that the forgiveness is going to be taken seriously, and that there's documents that are required to be submitted, calculations that are required to be submitted. And so just prepare for it. And, you know, Schedule A worksheet with, 2, 4, 6, 7 employee boxes isn't going to be nearly enough for some of you. So it's going to go on an Excel spreadsheet with the same columns and calculations and stuff. But you make sure you keep your source data so you're protecting yourself, because, we don't want anybody to run afoul of the certifications that you're making. And, the certifications are page 4 of the 11-page packet. And they talk about, that the authorized representative of the borrower certifies to all of the below statements, and they have to initial each one. And, you're basically under penalties of perjury, and you don't want to be making a false statement on these things. So back up what you're reporting and have it ready to go if there becomes an issue. And that's all I can tell you. I mean, that's what we've talked about many times on the tax front, many times in this world, is we got to just document everything. And hopefully, if you set up a separate bank account for your PPP money, that'll make it easier, because one of the requirements for data to provide is account records. And I don't know that I'd be particularly comfortable giving them my bank account records for my primary checking account if I didn't need to. So that's something to keep in mind as well. All right. Well, barring any other questions, we'll conclude this one, and we'll wait till the next one. I hope this stuff is helpful to you guys. I know it's incredibly complicated, and you guys are under enough stress as it is. So thanks for spending some time with us. And if you have any questions, as always, you can email Kathy or contact me, and we'll be happy to help you out however we can. All right. Have a great day, guys. Thanks much.